Just a reminder for people, this is part of Millionacres and Millionacres.com. And we're doing this today sponsored by our Real Estate Trailblazers service. So that's a service that really helps people zero in on some of the biggest trends in the real estate market. And right now, one of the things that we're so really interested in and excited about is the short-term rental space, the opportunities that it creates for people, whether you're an active investor or passive investor, you're curious about all of the things that sort of take part in being an Airbnb investor. So this month, I'm really excited to talk to Diya Liu, who's a real estate investor who specializes in Airbnbs. She's going to talk about some of the trends in the sector, what she thinks is really happening right now, and what investors should know about. She's also really prominent in the female real estate investing community, which I love. And so we're going to talk about what it means to be a female investor in this really competitive space. So welcome.
Thank you. Thank you for having me here.
Well, I want to share with people just a little bit about your background because I find it so fascinating. So you're a former engineer, patent litigation attorney turned full-time short-term real estate, hotel, and multifamily investor. And things that you want to know about Diya, she scaled from nothing to $100,000 net rental income in about 13 months. She's also had over 60 students, mentees, and business partners joining her along on this short-term real estate investing journey. And in 2021, she's really started focusing on multifamily short-term rentals and hotel acquisitions. She's recently closed a 10-unit multifamily in downtown San Antonio with business partners. She's converting that into short-term and monthly rentals. She also owns 9 short-term rentals on her own. She's under contract for, get this, people, 5 short-term rentals, 2 hotels, and an RV park, all set to close by the end of November. I mean, wow. So she can be found at diyaliu.com, and that's DIYALIU.com. Wow, you're busy.
I am. And so I'm actually on site right now at an Airbnb where we're conducting hotel due diligence on one of the potential acquisitions.
Well, let's start by talking a little bit about how you got started in real estate investing, why it appealed to you, and really how you've started to scale your business.
Yeah, so my background is really chemical engineering and then biochemistry at UT Austin. And then I was a patent litigation attorney for 2 very large firms before I really found real estate investing. And I just really loved real estate because it was a tangible asset. There's so many tax benefits to it. And so I really decided, you know what, I really want to move back to Austin, Texas, which is what I consider my hometown, and move back there before real estate gets too expensive. And as we all know, Austin did in fact get too expensive. So that was a great move on my part. I took a law firm job there, and I really just started saving everything I could to pour into real estate. And I found short-term rentals really because I love traveling. I love experiencing the local culture. I really like staycations as well. I really like design because I briefly had a fashion stint as well. So I love design as well. And so short-term rentals is this really great space where you can really optimize the user experience and your marketing, and therefore your visibility, and then therefore your bottom line by maximizing and optimizing your design choices, as well as just figuring out exactly what tech stack to use. That will really, really simplify your life. So I just really gravitated towards short-term rentals. As an engineer, I really like efficiency. So the fact that I can maximize efficiency and minimize how much work I have to do once I have set up a short-term rental, that just really, really appealed to me. And so and also the cash flow is insane. A 250 grand acquisition, my last 12 months, I gross $97,000 on that one asset. So the cash flow is obviously much better than long-term rentals as well. So that's another benefit of short-term rentals.
Interesting. One of the things that I find really fascinating about you and your journey is that combination of that design aspect with that engineer's mindset of finding the platforms to scale efficiently. I know your background there happens to be one of your short-term rentals. How did you go about making the design decisions, and what sort of places did you find inspiration from?
Honestly, I always tell my mentees that the 80% of booking decisions for travel tends to be female. And so for me, when I design, I really gravitate towards a little more feminine aesthetic without going into all pink everything and etc. I want it to be neutral enough to where a guy is still going to be comfortable in this space. And so when I look for design inspirations, I draw a lot of inspiration from the surrounding context. So if it's a beach rental, I really want to keep the linens and the wicker and the driftwood pieces to kind of bring in little subtle references without throwing a bunch of sailboats in everywhere and calling it a day. When if it's a ski condo, for example, maybe I'll have something a little more rustic, but still contemporary and bring that mix into to make it keep it interesting so that it doesn't look like every other ski condo in the area. Maybe I'll bring in local art pieces or custom made furniture. And then when we are doing something downtown, it's going to be lean into the contemporary aesthetic a little bit more. The San Antonio project, we're actually really leaning into the heritage of the city, and therefore we're bringing in a little more of the Spanish influences into our design choices for that property.
Oh, I love that. Yeah, I think that's really important is to have your short-term rentals not look like a basic, boring beige hotel. And it's clear you definitely don't do that. Let's talk a little bit about the platforms because you can't really scale in short-term rentals without having good technology, smart locks, Nest, other services. What are you really looking at when you start putting together your different platforms to manage your rentals efficiently?
I think that the biggest thing is to make sure that the hardware and the software is actually connected to each other when you're doing short-term rentals. And I think that that's actually the piece that a lot of traditional long-term rental investors have the most trouble with. I would say a large majority of real estate investors may not be as tech savvy and looped in into all these potential tech stacks that you can do with the different smart locks and et cetera. For example, you can have the smart lock that is talking to another lock management software where it automatically generates a code for each of your guests. And that code only works for the duration of that guest stay. So you don't have to worry about manually changing your PIN code or whatever. And then you can also have thermometers and noise detectors and et cetera that feeding into a central system. And so you know when, for example, 10 different devices are connected to the Wi-Fi at the same time for a condo that's only supposed to sleep two. So that might be an issue. So you can also have noise detectors and et cetera. So there's a lot of hardware that you can actually plant into your short-term rental unit to make your remote management a lot easier. So you can see everything in one central location. So that's actually something that we are working on as a team to with some former software developers who also happen to be in my mentorship program. We're actually building our own custom tech stack right now.
Oh, that's fascinating. Because I think you're right. There's so many different ways now that we can really effectively manage remotely for both short-term and long-term rentals. Things like leak detectors and different types of sensors are really ways that you can really stop a problem before it becomes a much bigger problem. So, what kinds of trends are you most excited about right now when it comes to short-term rentals?
I really like the fact that short-term rentals has brought in all these additional tools and including management software that wasn't available to the hospitality industry before. So now, because I am in the hospitality space, and honestly, I consider myself more in the hospitality space than the real estate investing space, honestly. And so when I'm staying at a hotel, I end up noticing a lot of these inefficiencies. My brain cannot help it. It's my engineering background. And so, for example, if I think everyone in this virtual room has had at least one housekeeper who's knocked on their door at sketchy hours of the early morning, asking if they need housekeeping at least once in their hotel staying life journey, whatever. And so that's really inefficient because that cleaning person is spending at least an hour on the clock every single day, just wasting time knocking on doors. There really should be a software that's telling this cleaner at a glance which units have checked out, which units actually want to clean, and etc. And so we're actually bringing the short-term rental model into the hotel space because, and a lot of people are really confused, like, wait, hotels are already short-term rentals. What are you talking about? You're turning hotels into short-term rentals. We're actually bringing the short-term rental efficiencies into the hotel space. That's what we're doing.
I find that so interesting because when short-term rentals started, they started trying to mimic the hotel experience. That was the whole plan. And now it's sort of switched the opposite way. And one of the things that is really sort of interesting is that short-term rentals have become more popular, partly in the pandemic, but even before that, because they offer so much more flexibility. You don't have to go downstairs for the restaurant, and you have more space if you have to work, which a lot of us are doing remote work. One of the things I found really interesting in Airbnb's recent earnings, they talked about longer term, short term stays, like 28 days and things like that. Is that something that you're seeing, is that people are wanting to stay longer, that is less about vacation and more about really sort of staying somewhere for a little while?
Yes, I think that everyone discovered in 2020, after the initial scare of April and May 2020, is that working from home now means you can work from anywhere. And that's a huge real estate trend that's driving up the sales of secondary vacation rental markets and et cetera, because everyone's like, you know what, I can work from the beach and I can work from the mountain and et cetera, et cetera. So yes, absolutely. Wi-Fi is now how fast your Wi-Fi speed is one of the most requested amenities from guests now, and definitely workspace, some sort of desk and some sort of comfy chair that you can actually work from, not just an uncomfortable dining chair, room chair that you can put in front of a desk, but a real rolling cushioned chair, for example. That's really important amenity. Maybe hookups for Ethernet, et cetera. Those are a little more popular as well, and definitely longer stays as well. I think that that's a big move that a lot of the short-term rental operators, as well as Airbnb and VRBO themselves, have really started marketing to this new slow traveling demographic, really. And I think that that's going to be a trend that's going to continue. I think hotels are starting to pay attention to this space, but I don't think they're doing enough, just because a lot of them do not have the kitchen that you can actually cook in. They do not have enough pepper and oil and spices and all these things, and pots and pans and etc., that you can really make a full meal with. And I think that people discovered cooking as well during the pandemic, and now everyone likes to cook a little bit more from home, and that makes vacation rentals and short-term rentals in general a lot more popular than hotels, in my opinion, going forward.
Yeah, I would absolutely agree with that. So there's Airbnb, there's VRBO, there's other platforms. How are you thinking about using different platforms? Are you seeing different results, and are you finding ways to kind of streamline? Because I know I've talked to short-term rental investors, and a lot of times they feel like they have to choose one because trying to manage multiple platforms can be a little confusing. How have you been managing that?
So there are property management software for short-term rentals that will streamline the booking calendar for all of the different sources of booking traffic. Now, for Airbnb, for example, they actually do favor you a little bit more on their search algorithms if you use them specifically. Just most of your booking is coming from them, then their search engine algorithms are going to pick that up and then they're going to favor you more. So I know that there's different business models. I know a lot of very successful short-term rental operators are just focused on one platform because that's the one in their market space, in their target demographic that works the best. Now, for us, we don't really ever limit ourselves to our internal biases. So I prefer, for example, if I prefer Airbnb and my business partner prefers VRBO, we're not going to bring those biases into a new hotel acquisition that we are doing. We actually look at the data. So what the data tells us is how many people coming in are actually booking our VRBO, how many people are booking on booking.com, how many people are booking on Airbnb in this market, in this zip code for this asset class, whether it's an RV park or a glamping experience, or it's a hotel or whatever it is. We actually look at the data and then let that inform a decision. We just had this conversation with someone that's one of our business partners. They were like, what's your game plan? And we're like, don't limit it based on what we think is going to work. We're going to look at all the options first, and then we will limit it according to the data that we find.
Interesting. That makes me want to ask a little bit more about your engineering background, because I know that that's something that really seems to drive how you think. And one of the things I've noticed, I've talked to multiple real estate investors who are engineers. I don't know what it is about that mindset and training, but it seems to really work for real estate investing. As you've started to grow your business, have you come across people who maybe discounted your advice because you're a woman, even though women make, as you mentioned, so many of the purchasing decisions when it comes to short-term rentals?
I think that there are inherent biases. For example, if I'm dealing with contractors and I walk on site, immediately they internally have already discounted what I have to say or what I have to bring to the table. I've actually had contractors who have said, you look like you just got out of college and this is your first house that you're purchasing. So that obviously influences how the contractor bid is going to come back and et cetera. And so, yes, absolutely. In terms of contract negotiations, I don't tell people that I'm also an attorney. So I walk into the room and automatically they underestimate me. So that actually works to my advantage in certain instances. And so I'm okay with that. And then in terms of the instances where it works to my disadvantage, such as when I'm dealing with contractors, that's when I have a team built anyway. And therefore, the person that's more suitable for dealing with contractors, they will be the one dealing with contractors.
How did you go about building your team and networking to sort of create what you're creating right now?
I think that the big thing in 2021, and it feels very sudden that all of a sudden we've been plodding along very slowly, and all of a sudden we're under contract for these giant commercial projects, and it looks to an outsider that it was a very out of the left field thing, but it's actually very intentional because this whole year I've been building up the systems and processes and the team, which is the most important part throughout this entire year. And I think that for me, really, we pull a lot of our most active operators, not saying passive investors or whatever, but just the people who are day to day that we're working with out of our mentorship program. And I think that that's very important because they have already been trained in how we analyze deals. They have been trained in our systems and processes. And a lot of them are very analytical, just like me. And I try to shy away from the people who tend to make decisions based on emotion. I love this deal. I don't know why. I just love it. That's not the great answer. I just want to stay there. I don't care if it cash flows that much. That's not the kind of short-term rental investor we want to partner with. And that there's nothing wrong with that. There's a lot of people who buy short-term rentals and they just buy it for the lifestyle, and that's cool, but that's not how we invest. So a lot of my partners actually have also tech backgrounds of some sort. They were formerly software engineers. They were formerly working at large tech companies, or they're currently still working at large tech companies. And so that's really a lot of the people have the drive to really want to work with project management software. They want to figure out a way to make everything more efficient, and they want to let the data inform the decisions. And that's really the kind of people that I look for when I'm out there networking and et cetera. I think team building is one of the most important things in scaling.
I absolutely agree with that. And you mentioned something interesting there that I want to zero in on is that you don't necessarily have to leave your job and go all in on real estate investing to be a short-term rental investor. On our team, we have a couple of people who are doing it as a side thing. I've interviewed a couple of people also who have multiple properties in multiple states, and yet they love their full-time job. They want to keep their full-time jobs. So are you seeing that sounds like you've got a mix of both on your team, people who are doing this full-time and then also people who are doing this as a passion project?
So I would say that a lot of the people who are on our team, they're working towards having real estate as their full-time focus, but that's totally fine if they also have a W-2 job right now. But, we're open to working with people who just want to do this forever as their side hustle, so to speak. It's just, you have to have the right mindset to vet the deals properly, and you have to have the right skill sets and the understanding of short-term rental industry. If you have those two and you can only dedicate, let's say 10 hours a week to this project, then your tasks and your equity split and et cetera can be mapped accordingly.
So let's talk a little bit about diversification, because you are diversifying across, you were in Austin, you've got stuff in San Antonio. I know you've got some other projects in other states. Tell us a little bit about that.
So I do end up preaching asset diversification a lot, which is kind of ironic when people first hear it. They think, well, you're only doing hospitality. How's that diversification? Seems pretty concentrated and putting your eggs in one basket. What I mean by that is that we try to invest in all different types of short-term rentals. So we invest in corporate rentals, which are, let's say, monthly stays. We invest in ski town destinations or mountain town destinations. We will also invest in beach town destinations. We will invest in urban destinations such as San Antonio, et cetera. So my personal portfolio has some mountain assets and also some walkable to beach destination as in that personal portfolio. And right now, what we're trying to put into the hotels and the RV parks and how we're acquiring them, the RV park is actually a lakefront property. And then the two hotels, one is more of a food and beverage tourism scene, and one is more of a mountain getaway scene. So they're very, very different in terms of their sources of tourism and who their target demographic is. And then, which is in turn why data is so important in informing amenities in terms of booking platform decisions and et cetera.
We got a question about what types of management platforms you use.
So we are currently testing a lot of different ones, but the most popular ones are OwnerRez and Hostfully. I think those are probably the top two short-term rental specific property management software. We are using OwnerRez for now, but we are not necessarily committed to that in perpetuity going forward.
What's your process like for testing out platforms? Do you use maybe one property as a sample, or do you use the trial period for some of them? How does that look?
So for us, it's really a matter of figuring out how many integrations we can put into it and we can program into it. So we don't just need the basic Airbnb and VRBO integrations. We also make sure that our smart locks are integrated properly without any major glitches. We have to make sure that the pricing software is integrated properly without any glitches and back and forth, and just calendar availability. There's no major glitches. And there's a maybe 10 or 20 different other things that we're looking at in terms of integration and how seamless that integration really is. And that's really the major part that we are testing. And I'm actually not the tech lead on this platform testing, but that's my understanding is really we're looking at all these different integrations and how many glitches and how seamless that process is. And we're actually going to build some of our own functionalities into the technology so that the hardware and the software will integrate a lot better and more smoothly for these larger operations. Because something that works for one unit might not work for 50-unit hotel. So we are trying to build something that actually can work across this spectrum.
Yeah, as you scale, you learn what won't scale. We've got a question from Linda asking, what do you use for financing, or is it all investor money?
Well, so for my personal portfolio, honestly, I started out, as I previously mentioned, just using my own money while I was working as an attorney. I only started full-time real estate investing last year. And so before that, I obviously had a W-2 job and et cetera. In terms of larger projects, I've been lucky enough to where a lot of my assets have appreciated quite a bit during just this crazy market cycle that we're experiencing right now. So if I sell one door, I can actually buy 12 or 15. So I'm actually doing a lot of 1031 exchanges right now with my own personal portfolio. And so that's actually accounting for a segment of some of the stuff that I'm going to close on later this year. And then we also take investor money as well. So we are currently just structuring them as JVs, but I think going forward after these few deals, because there's smaller deals and they require less financing, and I already put up a large amount of money on my end, and a lot of the other partners are putting up a large sum of money on their end as well. So we don't really need that much additional money for the down payment and to close the loan. But going forward, we're probably going to do syndications and maybe REITs at some point.
Excellent. Next question is from Monica. She asks, how do you overcome the challenges of property turnovers and resets with the current labor shortage?
So I think every single industry has struggled with the labor shortage. So we actually have cleaning companies that normally will have multiple cleaners on site in their Rolodex. So it's not something that we have to worry about if someone becomes sick or someone quits or whatever, because we have a whole team. So we try not to have just one cleaner for any of our assets, even if it's just one door. Just because if that cleaner quits, then you have to shut down your entire calendar.
Next one is from Krishna, who asks, what are your suggestions to newcomers who want to come into this as a full-time investor?
I would say a lot of people, I say this to a lot of people who are just starting out in real estate, that learn, courses, books, seminars are very, very important. You can learn. It depends on what kind of learner you are. Some people learn better by just making mistakes, and they might be expensive mistakes, but that's how they learn best. So they'll just get started. I actually started knowing zero things about real estate. I didn't even know how to change an air conditioning filter when I got started. And that sounds really weird, but I've been a renter my whole life, and I lived in buildings where the management took care of that. So prior to real estate investing. So if I can get started in real estate investing, anyone can. But I think that my personal journey in investing in real estate would have been much easier if I took some sort of mentorship program, if I took some sort of seminar, if I actually understood some of the key things that I don't think I understood when I first started out with short-term rentals. And I made a lot of expensive mistakes and iterative processes that really refine the short-term rental investing space. Or the blueprint for me. And that's actually what I put in my seminars and courses and et cetera. So whatever asset class you're interested in, I suggest you take a hard look at yourself and how you learn. Are you a learner that is very hands-on? Then you should try to find either some sort of mentorship program where you can be hands-on in learning, or you can try to do JV with someone who's more experienced in that asset class, or you can try to do it yourself on a smaller deal version of that deal. If you are more of a theory person, you have to learn the theory first, and then you go and venture out on your own. Then I suggest you listen to as many podcasts and read as many books and take as many free as well as paid seminars as you can before you venture out.
That is really good advice. I think people need to know their learning style and before they do anything like this. So next question comes from Bo. Wants to know, how do you determine the value of a short-term rental property?
So short-term rentals are evaluated currently, as of right now, the same way as a long-term rental in terms of 1 to 4 doors. So if something sells down the road for $300K, you, in theory, can only get or pay, you should only pay $300K. Now, if it's a cash deal or a seller finance transaction, and you feel like if you're the seller on the side, you could probably demand more than that because it's already a turnkey business. It's already operational. It already has cleaners in place, management systems, decor, furnishing. Those are really expensive starter costs. And if you're selling something as a turnkey vacation rental, you can probably command more if you do demand a cash sale, or if you demand a seller financing some sort of contract. On the buyer side, personally, I like to find value add projects. So they're not going to be already turnkey short-term rentals when I buy them. So I just evaluate them as I would evaluate any other long-term rentals, where the sale prices around the area. Now, 5 doors and up, that's when you start looking at the net operating income. And that's really when you're just analyzing it as closer to a hotel. You analyze a hotel or a multifamily apartment. You're looking at the NOI or net operating income. You're looking at the cap rate, et cetera. And that's really how you come up with a valuation for those sort of assets.
Suzanne wants to know where you're finding your short-term rental properties.
I'm finding them off market. So I don't know if you mean the source as in what marketplace, or you mean what geographic locations. I'm going to answer both questions. So in terms of what sources, I'm just looking on the MLS a lot, but I'm also talking to a lot of wholesalers. And I actually own the largest Facebook group for Airbnb investors. So I get a lot of off-market sources from there too. It's called Airbnb Professional Hosts. And so people will actually know me already because they see my face, and I post a lot in this group, and I post a lot in other investor groups on Facebook saying, you know what, I buy vacation rentals and I buy hotels. So people end up tagging me on Facebook groups all the time. Diya might be interested in this. I'm not even in that Facebook group. So I think that my name is getting out there to where people are bringing me deals now. So I get that as well. In terms of what geographic location, we really don't have a cheat sheet of these are the only geographic locations that we're going to look at. Once again, this sounds like a broken one-string banjo. Is that the phrase? It's whatever the data tells us where we should go. So if the numbers work, and it's a market that none of us has actually ever been to before, we're going to take an exploratory trip out to check out this market and see if it's something that we like. So I look at probably a couple thousand deals this year, and we've drafted a lot of offers, and then we done a lot of due diligence on so many different deals. And because of my various backgrounds, I look at it from the legal perspective in terms of how the regulatory risks are going to be. I look at it from the numerical perspective. We'll analyze whether the numbers work or not. And I also look at it, obviously, as an aesthetic. Is this something that we can actually turn in something ugly into something beautiful? So I look at it from all different perspectives, and there aren't a lot of deals that pencil out and checks all those boxes. So we really don't try to limit ourselves to one geographic location.
I think you made an important point there, which is as you become a more experienced investor, you spend a lot of time sifting through some of this stuff to find the pearls in there, because you may get a lot of things to look at that may not pencil out exactly. Got a follow-up question from Bo about an industry standard cap rate for selling short-term rentals. Is there any particular cap rate that you're looking at, especially with the larger 5 and up units?
In terms of selling or in terms of buying? Because we actually teach in our mentorship program that you should get your initial investment back in the first 18 months. And that's really the golden standard that we look at. So it's not really a cap rate per se, it's more of a return on investment. In terms of commercial assets, we actually, when we buy it, the asset is underperforming by a lot, and it's really ugly. And there might be zero financials in some instances because it's run by a mom and pop who still takes cash bookings that are walking in the day. So there's not really a great way to analyze cap rate and et cetera based on their financials. In terms of our target financials, we are actually analyzing the deal as if for cash out refinancing purposes as well as resale purposes. We're looking at what the hotels are selling at in terms of cap rate in that area, just because in case the lenders are not convinced that short-term rentals should be evaluated at a much lower cap rate, like multifamilies, long-term rental multifamilies, they will probably look at what the hotel cap rate is and then give us the more conservative evaluation, which is going to be the hotel cap rate. And so when we're doing our numbers, we're running our numbers and making assumptions of what after stabilization, what this asset is going to be evaluated at. Our cap rate is going to be calculating based on the more conservative set of assumptions, which once again will be the hotel cap rate in that area.
Great. Thank you. You've mentioned data a couple of times. People want to know, how are you gathering data, and do you have kind of a checklist you can share?
It's honestly really, really deal by deal. So there's not really one checklist. So that's what the mentorship program is for. I hate to say that it's really deal dependent, but really it is. Because if we're looking at a deal that looks like it's great on the spreadsheet, maybe the crime rate is really high, or maybe there's no way to find a good cleaner, or maybe that based on the political climate, there might be short-term rental regulations coming down the pipeline. So I do have courses on, the basic checklist. It's a 1 hour thing, and if anyone wants to reach out to me after this recording, they can totally, find me on Facebook or Instagram or whatever. But honestly, it's really deal dependent. I'm giving you the larger things that you should be aware of. You should be aware of the short-term rental regulations. And not just what's currently there, but also what's 5 years coming down the line. That's very, very important. I see a lot of short-term rental investors who are just like, well, I bought it, and then now 6 months after, the city outlawed it, and now I'm screwed. So don't be that investor. Definitely do your due diligence on what's coming down the pipeline. It's usually these regulations, they are trickling in, and it's a prolonged process. It's going to be at least a year. So you actually should be looped in on this when you're doing your initial due diligence. What are their sources of revenue in their government? Is it mostly tourism? Because if so, maybe the risk is a little lower than if if the city is mostly like Austin or whatever, where they're more concerned about having enough housing for all the tech workers that are moving here permanently. So that's the political climate we're talking about. And you can also look at the numbers, of course, and we have a whole giant underwriting spreadsheet that we use internally. And that's something I actually had to build from scratch, because there's really not a good underwriting model out there that I really found. I found a lot of great underwriting models for long-term rental multifamilies, but they don't work for short-term rental multifamilies. They don't really work well for hotels. And so I had to spend hours and hours and hours making my own underwriting model so that we have something internally to work with. So that's something else. Obviously, you have to make sure that your numbers are solid. I see a lot of people with really sketchy financial assumptions. Big mistake. So don't be overly rosy. Don't assume you're going to outperform the market. We always outperform, but we don't assume that on our financial spreadsheet. So that, those are the key things I think that are really important. How sophisticated your competitors are. If they're really competitive, if they're really sophisticated and everyone's gorgeous, all their photos are glossy versus everyone's mom and pop and everyone's taking cell phone photos and uploading them onto Airbnb, that's relevant as well. So can you outperform the market really easily, or are you going to be entering a very saturated market that's already very sophisticated? So those are some of the big things that you look at, but really it's very deal dependent.
Fantastic. Thank you. I know we've taken probably more of your time than we expected to. So we're gonna kind of bring this in for a landing. Could you tell people where they can find you?
Yes, for sure. They can find me at Diya Liu, DIYALIU.com. I think the best way to reach out to me would be to add me on Facebook, where I'm the most active. If they find me on Instagram, it's Diya ESQ. But Facebook is probably my preferred method of communication anyway. So if you add me, definitely mention this podcast first, because otherwise I get a lot of friend requests. But I think that's probably, it's just Diya Liu on Facebook. So you should be able to find me pretty easily.
Well, perfect. And that gives me a little segue to say that this is a Millionacres program. This is sponsored by Millionacres Trailblazers, which is one of our premium services, really focused on trends in real estate, the trends that we're seeing. Some of them that Diya talked about today: short-term rentals, platforms, changes in technology, all of the things in real estate that we are seeing happening so fast. So reminder to people, we will be recording this. This will be sent out. You'll get an email from us and more details on where to find Diya and where to find information on real estate at Millionacres and Trailblazers. Stay well and stay invested, everybody. Thank you, Diya.
Thank you.